Welcome to part 2 of our small business tax series. In the last video, we talked about U.S. tax deductions for small businesses. This time, we're covering U.S. tax credits. What are they? How are they different from tax deductions? What are the most common ones to claim? And most importantly, how do you claim them? But before we start, the lawyers want us to remind you this video is for informational purposes only and should not be relied upon as tax or legal advice. Since everyone's tax situation is different, contact your tax advisor if you need assistance. Okay, let's get into it. First, let's define what a tax credit is. Like a tax deduction, a tax credit reduces how much income taxes your business owes and might just be your new BFF. Now, you might be thinking, how is a tax credit different from a tax deduction? The key difference is that a tax deduction reduces your business's total taxable income, while a tax credit directly reduces how much your business owes in taxes. To put this into practice, if you qualify for a $100 tax deduction, then at a tax rate of 25%, you're saving $25 in taxes. But if you qualify for a $100 tax credit, then no matter the tax rate, you're saving $100 in taxes, because $100 will be paid or credited towards the taxes you owe. If you want a refresher on tax deductions, check out the last video. Now for the fun part, the most common tax credits for small businesses. A popular, but often missed tax credit is the Research and Development Tax Credit. Costs associated with researching and developing new products, technology, or other improvements on a product or process such as wages, contractors, and supplies may qualify for an income tax credit. Claiming research and development credits can get a bit complicated, so we won't go into all the details here, but we recommend you contact a tax professional if you think you might qualify. The next credit is the Work Opportunity Credit, which applies to businesses who have hired employees facing barriers to employment, such as people who are unemployed, veterans, and summer youth. The Small Employer Health Insurance Credit applies to small businesses that provide health insurance to their employees. You can claim up to 50% of your health premium costs annually. To qualify for this tax credit, your business must meet particular qualifications, like having a certain number of employees and purchasing a qualified health plan from the Small Business Health Options Program. Another credit that can help you feel good about your business and save you money is the Disabled Access Credit. If you spend funds to make your business more accessible to those with disabilities, such as updating your building or modifying equipment, you might qualify to get some of that money back. So, you think you qualify for a credit? Maybe even a few. Go you. But how do you claim them when you go to file your taxes? Every credit you claim will have their own form to fill out. Everybody loves forms. You then carry over all the separate credit amounts to Form 3800, the General Business Credit Form. This form summarizes each unique tax credit for specific business activities and allows you to claim your separate tax credits. Think of it as a cover sheet of all the tax credits you can get and all the money you'll hopefully save. That's it for part 2 of our small business tax series. To recap, tax credits directly reduce how much your business owes in taxes. The types you qualify for depend on your business's structure and activities. Since it can get a little confusing, we recommend consulting a tax expert if you need any help. Speaking of experts, Wave's in-house bookkeeping pros can help you get your books in order, so it's easier to catch mistakes you might not have noticed, and our accounting coaches and tax pros could find tax credits you're eligible for. Visit our website or the link in the description to learn more. That's it! Feeling prepared yet? Get excited, because preparing to file your small business taxes is the subject of our next video. See you soon.